oh, the crypto rails are actually better for trading these traditional assets than the current rails that we have. So we're going to move over slowly. And so
if we can move all the 1.7 trillion of our assets, currently we have about 500 million. If we can move that all onto blockchain, we will save $200 million.
It's time also from a regulatory standpoint. I think I should mention it. We have more than 20 banks that have integrated and are integrating with us. So right now, more than a third of the Swiss population is trading crypto.
I've got some juicy stuff for you guys today. I'm going to read some documents, play some video clips, give everybody a second just to tune in. We'll start talking when we hit like 150. Start going through the material today. Hope everybody's had an amazing week. Remember that we are in an era of information, an era of transformation. Make sure that you guys are understanding that the internet is a powerful gateway to transform your life, whether it's upgrading your mindset, expanding your network, growing your business, creating wealth. It is a tool that can open doors to endless opportunities. Make sure that you all are taking advantage of that, because most people nowadays, I'd say about 90%, maybe even more than that, of the population spend their time on mindless consumption instead of harnessing the internet's potential to level up their lives. Do not be a part of that crowd. Now is not the time to be fearful. Now is not the time to be uneducated. Now is not the time to not be networking and meeting people and joining like-minded communities and consistently just digesting valuable information from like-minded individuals like myself and other good researchers out there, because this is a once-in-a-lifetime opportunity. Now's the time to take control of yourself, use the internet to empower yourself, and watch how it propels you towards success in your life, okay? Shit, what's my XRP price prediction for this bull run? I don't know. I don't think I've ever answered that publicly, honest to God. See, it's different for me. I'll start with that because, honest to God, I don't plan on selling a lot of my XRP. I'll probably sell my initial investment into XRP if we ever go back to previous all-time highs at a $3.48 valuation. So just as an example, if my initial investment into XRP was $75,000 and we go back to previous all-time highs, I'll probably sell $75,000 worth of my XRP to break even and make sure that my investment becomes risk-free. But I plan on holding the vast amount of my XRP, and I have quite a lot of XRP. I've been holding it since 2017, bought the vast majority of my XRP at 11 cents. So I plan on holding it for life, honest to God, because in the future, we're going to be able to utilize our XRP in the DeFi ecosystem to earn and generate passive income. We're going to be able to lend it, borrow against it, utilize our XRP to provide liquidity. That's something that we talk about heavily in the Wealth 28 Club. We're heading into a digital environment where these digital assets can be earning us passive income. So it doesn't really matter to me whether XRP is 50 cents or $50. I can utilize my XRP in the same exact way, no matter what price valuation it is. So for me to sit here and tell you guys or tell my audience that I'm going to sell my XRP for fiat, no. I think that that's a really irresponsible move, an uneducated move, in my personal opinion. All these individual influencers that are like, well, if XRP goes to $1,000, I'm going to sell it. That is the stupidest thing ever. Because $1,000 XRP is going to be able to generate you a lot of passive income, Okay. So what's going on, crypto from the D? What's up, brother? Good morning from the CYPRX chat. We got members here. Hey, it was really cool. Going to the XRP Unhinged, the XRP Unleashed premiere, and actually meeting some of you Wealth 28 individuals in person. Actually, a lot. As a matter of fact, we showed up pretty deep. I'm not even going to lie. Myself and Mr. Aqua were pretty stunned to see how many people from the Wealth 28 Club and the CYPRX community actually came out in person. We had I think I met over 8 people that were part of the private CYPRX community this past couple of days when we went to Houston, Texas. So it was pretty cool. But yeah, slow play, you know, I'm going to be completely honest with you. Bull run predictions for XRP, I've never even had them because of the research that I do for digital assets. For me personally, I've always had this perspective that I'm accumulating these assets for a lifetime. You know, I'll be able to generate passive income off my digital assets, live off of that in the future, and then give my kids my digital assets, and they don't even have to sell them, because when I go, then they can just utilize them to generate passive income. You know, that's the future that we're heading into. Think about it now. You know, in traditional finance, you have money in your bank account, you have money in your savings. Well, even though it's a very small yield that you're earning, your money earns yield. Now, obviously, of course, it's horrible and it's not anything to be ecstatic about because the percentages are just disgustingly low. But in DeFi, you know, the percentages are significantly higher, and in the yield that you're going to be earning in DeFi, whether it's through stable coins or on your digital assets, is it's life-changing yield. You know, even if you just became a multi-millionaire after this next bull market cycle and you did sell, again, if you do want to sell, personally, what I plan on doing, any assets that I plan on selling will be into stable coins, and then those stable coins will be earning me yield. I mean, right now there's platforms out there where you can earn 10 to 20% on USDC. And if you make $1 million, you know, do the math. What's 10% on $1 million? What's 20% on $1 million? You know, so everybody's so fixated on these short-term price fluctuations, you know, these price predictions, and a lot of people are going to get priced out if they decide to sell and they don't know what to do and how to maintain and keep their digital wealth after this next bull market cycle, because the fiat, the traditional financial system, over the next consecutive couple of years / decades, it's going to go away, and people are going to get burnt because they're living in the now and not thinking about the future. So just keep that in mind, y'all. All right. All right, let's get started on today's call. We got 500 people in the call, so blessings to you guys for coming out. We're just going to go over some information. So in today's video breakdown, we're going to be reading some fundamental pieces, going over some video clips, because right now we're on the precipice of a major turning point. Personally, my perspective in the market is we still have some headwinds, some things in the market that we need to get through before we can 110% confirm that we are about to just see a massive bull market cycle. We'll get to that portion of the video breakdown. Now, it's nothing too significant, and if some of these factors that I talk about today can start to be seen in the rearview mirror, meaning they are put behind us, then I am 110% full on bull mode. But there are still some things that we need to be cautious of. However, that aside, we are in a major turning point. We're seeing massive institutional interest that is only going to continue to scale as regulations become clearer and clearer as time progresses. We're seeing retail interest now. Just recently, I read an article spike new all-time highs. Bitcoin's trading new all-time highs. The total cryptocurrency market cap. Isn't it crazy how vast majority of altcoins are still heavily suppressed right now, still trading over 70% discounted from their all-time highs? And we are back right now at $3 trillion market cap, which is where we peaked out last bull market cycle in 2021. I mean, wow, we are setting the stage to see such massive price appreciation in certain altcoins. I can't speak for all of them. In the next consecutive couple of months / quarters as we head into 2025 and then rolling into 2026, I firmly believe that we are on the precipice of experiencing something significant. So today in the video breakdown, I'm just going to attempt to prove to you guys that that is to be the case, regardless of when. Again, it's not a matter of if anymore. It's just a matter of when, and that timing of when this is all going to take place. Anybody can put their 2 cents in and give a prediction on when that's going to be. I could put my 2 cents in and tell you when I think that's going to be. You could do the same. But right now, I'm trying to get you guys to see that that is irrelevant. I opened up this call by telling you guys that the internet is a powerful gateway to transform your life, whether it is upgrading your mindset, expanding your network, growing your business, or creating and generating wealth. Well, we really have to be in the moment, and we have to understand that right now, just even the 600 people now that are on this call, you are different from the vast majority of individuals, because 90% of people, not only just in the world in general, but in the internet realm of things, spend their time on mindless consumption consuming just entertainment instead of harnessing the internet's potential to level up their lives. So you guys are different. You're part of the 1%. You're part of the individuals that are actually taking initiative. Hopefully you're not just listening to these calls and these lives and watching the CYPRX content for entertainment, and you're actually taking advantage of the education that we provide. So let's jump in. I'm going to be reading a Signum's report today. I tried to download it, but I guess for my jurisdiction, because I'm in the United States, I was unable to download it. We're going to get into the Signum report. We're going to play some video breakdowns from Signum's Matthias Imbach. He plays a very significant role at Signum. We're going to get into some institutional perspectives. Just showing you guys that we are at an inflection point, keeping you all forward looking, but also keeping you guys on the fence and educating you all on some of the things that we are paying attention to here at CYPRX as to some potential downside plays that could come into fruition, creating some discount opportunities for us as we head into 2025. And it was actually really refreshing talking about some of these things on the geopolitical spectrum and the economic side of things with Jake Claver at XRP Unleashed in person. It was really cool having a like-minded experience with an individual that actually has credentials in this space. So first, we're going to start here. I've always been attempting to convey to you guys through the documents that I read that banks are 110% interested in these digital assets. And I've generated this narrative based off the documentation that I read that if these banks don't adopt and adapt to this new technological transformation, they will fall behind, which is just something that further supports the case that these banks will inevitably transition over to utilizing blockchain, artificial intelligence, crypto, native digital assets, so on and so forth, and providing these things to their clients, providing access to these new technological advancements to their clients. Because if they don't, if Wells Fargo is transitioning and doing all these things, AI, making transactions faster, providing these solutions to their clients, and Bank of America isn't, Bank of America is going to fall behind. Okay. And I'm utilizing that as an example. However, both of those banks that I just mentioned are making the digital transition. But just so you can see here what I'm talking about, and that it's not just me making this stuff up. This is shout out to the CYPRX researchers, in case you guys are on the call listening, for sharing this document. This is from the BCG, Boston Consulting Group, which is one of the major conglomerates for consulting. Glacial innovation rates must thaw fast or retail banks face 2030 failure. This is from October 2024. And just reading some little tiny snippets in this, it goes on to say here, banks' failure to adapt conversely will mean relatively higher costs and fewer customers. Indeed, by 2030, there could be 30 to 50% fewer banks than there are today for those who fail to adapt to this new technological transformation. And then here you can even see it says, after decades marked by glacial innovation rates and performance stability, retail banking is on the brink of a seismic shift. It says it right here. Two game-changing factors are reshaping the commercial landscape, creating revenue and efficiency opportunities, but posing a threat to banks that fail to rise to the challenge. So this just confirms the narrative that I attempt to convey to people. And it's that if these financial institutions, how as retail traders can we confirm all the rumors that banks are coming? Well, we can see in the documents that they tell throughout these PDFs, throughout these private closed-door meetings, each other that if they don't adopt, they will fall behind. Okay. And that's very significant because that can give us confidence that eventually, like I said, it's not a matter of if these financial institutions adopt, it's when. Okay. And again, we can all put our finger and, shake our magic crystal balls on when that will be, but that's not the point. We should all have a long-term vision, understand again that the internet is a powerful gateway to transform our lives right now. And hopefully you guys are utilizing it for that. Now, here is another fundamental piece from James Harris, Chief Commercial Officer at Zodiac Custody. And this actually goes hand in hand with the video breakdown that I just posted on my X. Okay. So I said to you guys in this post, now is not the time to be afraid of this space. The attitude towards digital currencies is 100% changing. Digital assets are reshaping finance at a rapid pace. Tokenization and TradFi integration will continue to mature, leading to massive capital inflows into this digital asset space over the next, let's just say, minimum of a year, maximum of 5 years. And we are going to see transformational wealth that we've never seen the likes of before. And you can see this is directly coming from James Harris, Chief Commercial Officer at Zodiac Custody. You guys know Zodiac Custody partnered with Northern Trust, Standard Charter, SBI, so on and so forth, right? But he says right here, I had the privilege of attending Cybos, which took place, I think, like 2 weeks ago in Beijing on behalf of Zodiac Custody, and I was very impressed. Now, right here is what I like to be highlighting on this post. And he goes on to say here, which I really, really respect him saying this, like, mature approach. Bridging digital assets and TradFi finance. While digital assets hold immense potential, the industry still has work to do, which it does. As the Sibos panels made clear, we in digital assets must understand and respect the existing TradFi ecosystem and its complexities. Traditional banks aren't looking for a total overhaul overnight. They need systems that can integrate smoothly. Again, I repeat, they need systems that can integrate smoothly without the digital asset sector coming off as too aggressive or out of sync. So I really like that because that plays hand in hand with this video clip that I just posted to you guys on X. I'm going to play it for you all real quick, but this gentleman pretty much goes on to talk about, what is the value of DeFi today? And what is it going to be in the near future? I mean, in my personal opinion, I've seen price predictions from Ripple, for example. They just put a prediction out, I believe it was like in September or October, where they think that the DeFi ecosystem is going to scale to $600 billion by 2032. I personally think that it'll be well worth more than $600 billion by 2032, but that's just my personal assumption. But just go look at the TVL that's locked in DeFi today, right? Go look at how small the XRPL DeFi ecosystem is today, considering the fact that they are attempting to bring institutional investors to DeFi, okay? There are so many upside opportunities here that people are sleeping on, not just in the payments niche, but in DeFi alone, that is just going to be significantly higher than the valuations that we're seeing today. Just take a second and listen to this gentleman speak. And this just goes hand in hand with what the chief commercial officer at Zodia Custody said about institutions moving over slowly. So again, this solidifies the perspective that I'm trying to get you guys to have. It's not a matter of if anymore, it's a matter of when. And when, again, we can all sit here and speculate, but as long as you know that when it's coming, that's the important piece here. So take a second here and listen to what this individual rep has to say here. Let me just zoom in for you guys so you can actually see.
And so what is the value of DeFi today relative to what people perceived the value of DeFi might have been 3 years ago? Well, the value is that it's actually easier and faster and better to build financial products on a DeFi stack than it is to build it on the old traditional financial stack that was built over the last 50 years. And that's why you're seeing major banks, major PBs start to build things like tokenized money market funds, because they see this and they say, oh, the crypto rails are actually better for trading these traditional assets than the current rails that we have. So we're going to move over slowly. And so the benefit comes.
You guys heard him say that, right? So we're going to move over slowly. The TradFi, the traditional financial players, are starting to realize that crypto and blockchain native rails, they're better than the traditional financial rails to be moving these digital assets. And so what they're going to do is they're going to move over slowly. And that just goes hand in hand with what the chief commercial officer at Zodia Custody just said in his post right at the beginning on LinkedIn. He said that they're going to, traditional banks, it says right here, aren't looking for a total overhaul overnight. They need systems that they can integrate smoothly. Okay. So this is going to be at the end of the day, it's going to seem slow, right? But looking back 5 years from now, I mean, I couldn't even imagine what the market's going to look like 5 years from now. It's going to be insane. And, just to go further down the rabbit hole, just to confirm that these large institutions are talking about this stuff on stage. This is an individual rep from Franklin Templeton. Let's see what role he plays. It doesn't say, but you can see his name right here. Andrew Crawford from Franklin Templeton, the future of asset management. And so we heard, this gentleman on stage talk about how the banks are going to transition and move over slowly as TradFi realizes that the blockchain and crypto rails are better for them to move these digital assets on their rails. And we see Zodia Custody reps confirming that, TradFi wants to move over slowly. And I even just showed you guys Boston Consulting Group documents where they're talking about how banks that don't adapt and move into this new digital realm of things, they're going to fall behind. Okay, well, listen to what Franklin Templeton here says about moving $1.7 trillion of assets under management onto the blockchain. I mean, that is such a massive statement that this even took place. Go ahead and take a second and listen to what he says here.
So, Andrew, what do you feel are the market forces that are leading to adoption by asset managers of fund tokenization?
Yeah, good question, Sergey. So I think there's been a big transformation this year with the bifurcation of crypto and blockchain. And crypto is the main asset that sits on a blockchain-based recording system or record-keeping system. What we see is now a lot more people are seeing the benefits, whether it be cost, efficiency, transparency, interconnectedness of operating on a blockchain-based system with a single ledger. And we see that's really driving, will drive the industry in the next 12 months and beyond very quickly.
So you feel it's the efficiency gains from putting a fund structure on a chain?
Yeah, I mean, we did a study where on the traditional way that we record a transaction, it cost us about $1 to do that. So for us to do 50,000 transactions on a traditional rail costs $50,000. 50,000 transactions that we've done on the Stellar network has cost us $120. So there's a huge cost saving, but then that cost saving also leads to efficiencies in the sense that you don't have to do the reconciliation of multiple ledgers. You don't have to remediate issues. Everyone gets the same information synchronously. Yeah, so it's a real cost that we can, identify the actual saving. And then these other benefits, we spend about $200 million a year on remediation and reconciliation. If we can move all the 1.7 trillion of our assets, currently we have about 500 million. If we can move that all onto blockchain, we will save $200 million, excluding the transaction costs, which will be, 0.0025 of what they are today. So it's
I mean, wow, $1.7 trillion of assets under management, and he talks about moving that onto the blockchain. Now, what I really want you guys to pay attention to, remember, it's about when, not if, is he says, in the next 12 months, this is going to be huge. This is going to be massive. So just think about this. Even if we did experience a bull market cycle, in mid 2025, or like a massive blow off top on altcoins, like think past that. This is so much bigger than price appreciation. This is the freaking fourth industrial revolution. I think people they're honestly just blindsiding themselves. Imagine selling for fiat, right? A decaying system that right now, and I mean, I'm not even going to get into the traditional financial system. You guys know I don't need to beat a dead horse. Imagine selling in 2025, 2026, sitting on all this fiat capital in your bank account, and then migrating into 2030 and beyond, and not being a participant in crypto would be the stupidest thing, in my personal opinion, that anybody could do. So have a strategy this next bull market cycle on how you plan to take some profit, so that way you can mitigate your risk exposure, which is obviously a smart thing to do, but not underexpose yourself to this space. That is the one thing that I'd ask my followers to think about, is you don't want to have underexposure to this space. A lot of people, obviously, of course, tell you not to have overexposure to the space, which is smart as well. You don't want to over leverage yourself or overexpose yourself to risk that you can't stomach. But imagine being underexposed to this space because you lived through in 2025 a little pop in altcoins, right? Which everybody's expecting, even myself, and you sold for fiat into a decaying traditional financial system. And then you're now operating, let's move forward into the future in 2032, 2035, and you don't have any digital assets because you sold them in 2025. Imagine how, in my, again, personal opinion, how dumb you would feel, So really start to strategize and really start to figure out how you can create income now, so that way you can detach yourself from the current price valuations of these digital assets, which is why, when I was just talking to you guys, I don't remember who asked me in the chat, what's my price prediction on XRP? I don't care what the price of XRP is, because it doesn't matter to me whether XRP is 50 cents or $1,000. In the future, I plan on holding my XRP for a lifetime, because I'm going to be able to utilize my XRP in the DeFi ecosystem for forever, to earn me yield, to earn me passive income, to lend it, to borrow against it, to put it into liquidity pools to provide liquidity with XRP and earn on it. I don't care what the price is, because I don't want to sell my XRP, my digital asset, right? It's a digital asset. It can be earning you money for fiat. Okay. So just take that into consideration. Again, just get the brain juices flowing, some perspectives to think about. Stop thinking so short-sighted, and understand that all these institutions that are playing the bigger picture game, that are about to bring trillions, they're not thinking right away about next year. They're thinking about 5 years from now, 10 years from now. And again, as a retail investor that wants to survive long-term in this digital transformation, so should you. Generate a week plan, a month plan, a quarter plan, a yearly plan, and then a 5-year plan and a 10-year plan, and adjust and adapt to changing market conditions. Okay. Moving on, let's head in, because again, I want to get to the Signum report. And I want to get to some more video clips from some individuals from Signum. And then also I want to end this call, once we get to the portion about talking about some things that I'm still paying attention to in the market, some headwinds that we still need to get through that could weigh on risk sentiment as we head into 2025. So I posted this to you guys. I want to actually read thoroughly through this, because I didn't in a previous video, but long story short, okay, this is a document, shout out to the CYPRX researchers, from a city. So again, the idea of this video is to show you guys that banks are 110% coming, and they're talking about it not only on stage, but they're talking about it in their documents. Here is another document from October 2024 from Citi labeled Cross-Border Payment 24/7. And this document, honest to God, was so monumental. We got individuals from Swift here participating in this document. This is Nick Kerrigan, Managing Director, Head of Innovation at Swift. And he talks about crypto assets and digital assets I'll read it for you guys. It says, by contrast, adoption of tokenization could take longer. Following on from our collaborative experimentation this year, Swift is now at a point where its own trials, where our community will be able to run live controlled digital asset transactions over our network from 2025 and beyond, which is a really exciting milestone. And so, the terminology digital assets is so vague here, but what I really like about this document, because there's so many people out there that are like, well, when they say digital assets, what do they mean? Well, I really like this document because it breaks down what they mean by digital assets. So it says right here, digital assets, including cryptocurrencies. I like that. I highlighted that because so many people are like, well, they're talking about digital assets, not crypto. Well, this document specifically says cryptocurrencies, which again, keep in mind, we are headed into an environment where all of these CBDCs, central bank digital currencies, CBDTs, central bank commercial bank deposit tokens, stablecoins, and crypto, they're all going to coexist in this interoperable fashion in the future moving forward. For anybody to tell you guys that crypto is going to go away or not exist in the future is honestly the most uneducated, illogical person that you could come across. Unfollow them, stop talking to them, and ignore them, because again, you need to utilize the internet and this age of information to benefit you, not weigh you down and distort your mindset from what is actually happening. So cryptocurrency, stablecoins, commercial bank deposit tokens, and central bank digital currencies are being further integrated into the global financial payment system. I mean, it says it right there. This is coming from Citi. This is not coming from CYPRX. This is not my personal opinion. This is called research, and this document is from October 2024. So, those naysayers on the internet, or even your family members, like think about how many people they're watching this right now, 1,300 people. And I guarantee you, each of us have that person in our family who knows what Citi is, probably maybe even most likely have like a Citi debit or Visa or card, like checking account, savings account, card through Citi, right? Or they know what Citi is. And then here you have a document from Citi literally telling you all that cryptocurrencies are being further integrated into the global financial payment system. Like, this is the document that you could take to your family members and show them, like, hey, look, this is not me telling you guys to get into crypto. This is Citi, a bank that you use most likely, telling you that this is happening. So wake up. It's time to wake up. It's time not to be a naysayer. Like I said, now is not the time to be bearish. Even if we see another market downturn and liquidations in this space, it will most likely be very short-lived, no longer than a month or two long. Even if we did experience a significant pullback from where we're currently trading at now, the long-term trajectory of this space, 5-10 years out, is 110% to the upside. Yes, short-term things could take place in the near term, right? We could see a stablecoin depegging or collapse. We could see more exchanges going bust or projects going away. And all of those things, obviously, of course, we have to assume would create short-term headwinds in this space. But stomach that shit, because long-term, ladies and gentlemen, I mean, I don't know how people don't see it, So let's migrate over. Signum report. They just put out a report. I tried to download it. I'm an accredited investor. I don't know why I wasn't able to. So I'm assuming it's because of the jurisdiction, because it says only from selected countries are able to download this. So I was unable to, but we'll get into the report from TradingView that they analyzed about this report. But before we get into that, let's play some.
Asking for on-chain representation.
Let's get into some video clips from Signum's Matthias Imbach on institutional digital asset adoption. This video is from a month ago, only has 1,000 views. Okay. Keep in mind, there's millions of people involved in crypto, billions of people on this earth. And a video like this, the gems that I'm going to share with you guys, only has 1,000 views. Okay. This is the CEO of global digital asset banking, Signum. So I say that he has, a pretty heavy list of credentials here. So let's just take a second and listen to a couple of video clips. I'll play them back to back and then I'll digest them afterwards. So it's about 3 different video clips. Let's listen to what he says. And this just goes on to continue the narrative that financial institutions are coming. He also confirms that over 20 banks are integrating crypto into their core infrastructure. He talks about public-private blockchains, and he talks about the macro environment and how after getting through a couple more different headwinds, the game in the perspective of getting into the digital asset space via an institutional perspective, it's changing. Okay. So just take a second here and let's listen to what he has to say. Shout out to you guys, by the way, 1,300 people listening to this call. If you're new here, you're new to CYPRX, you're not aware or awake to what it is that we do. Just deep research, unopinionated, unbiased research. Sorry, I'm getting a phone call right now. Just really bringing to light the deep research that anybody can take a part of, and just enlighten yourself on what's happening via this digital transformation. We're not here to tell you guys certain digital assets are going to be the one, like most mainstream influencers. We're not here to give you guys outrageous, unrealistic price predictions. We're here to really just push education and enlighten people about this Web3 ecosystem and show you all that we are personally living through a massive transformation, and now's the time to take advantage of that opportunity. So I appreciate you guys for coming out. I can't stress enough that now's the time to further your education and really push through all the noise and all the BS on the internet, and join like-minded communities. We have individuals right now in the chat from the CYPRX private community. I even got to meet some of you guys at this most recent event, XRP Unhinged, and it's so life-changing to really see that we here at CYPRX are benefiting individuals, whether it's through our fundamental research, our technical analysis that is all sound and logical, utilizing institutional deltas, whether that's just through building camaraderie in the community. It's really, really sensational to just see you guys benefit. And that's, again, why I even started CYPRX in the first place. So let's just take a second. Let's get back on track and let's listen to what Matthias Imbach here, CEO of Signum, here has to say.
Is because it just sent that signal to the market. Now, okay, it's going to be accessible to many more people in traditional ways, and also it started to send the signal that the US is at least starting to change its stance from a regulatory perspective. So that led to quite some market movements and positive sentiment. Secondly, it's more broadly also the regulatory landscape. The reality is, it's just we feel there's now real developments. We have recently seen the MiCAR about to go live. Circle had great news with the MiCAR compliant stable coins. Switzerland has been doing this since 2019, so we've had that regulatory certainty for a while. The UAE is working hard on further building out frameworks. Singapore as well, and Hong Kong. So we are now starting to see a global kind of more and more cohesion that allows to truly scale this and to again embed digital asset finance with traditional finance. Thirdly, I would say it is a bit more Switzerland specific, but given we were a bit maybe trailblazers and ahead of its time also from a regulatory standpoint, I think I should mention it. We have more than 20 banks that have integrated and are integrating with us. So right now, more than a third of the Swiss population is trading crypto ultimately via Signum. They don't know it because we are just in the background, with more than 20 banks, including state-owned banks. But this is obviously also bringing adoption. I think it's significant. It's significant for Signum's clients because we are supporting the ecosystem by providing banking services, treasury services to crypto companies, to founders, etc. And if they do well, and if they can scale, we also do better. And it's beautiful to see the success stories of our clients, and particularly in this year we see so many of them. So it's a very exciting time. We had this hope of programmability, right? We can make financial assets, financial instruments, we can program them with code and make them do what we want in a more efficient way, and ultimately, as a result, create better products for our clients. And now, given also the macro change, the interest rate environment that has changed over the last few years, and also just the ecosystem evolving, now I think the real game is starting. I mean, this year, one of the key trends was really also the real world asset tokenization that is taking off. We have this year.
All right, so I'll pause it right there. Let's reflect on some of the things that he said. He talked about real developments are starting to unfold and have been unfolding at a rapid pace over the past consecutive couple of years, which is allowing traditional financial players to truly scale, which is phenomenal to hear. Then he also confirmed that over 20 banks, specifically in the Swiss side of things, but it's still confirmation that banks themselves, and he said, are integrating digital assets and crypto into their core infrastructure. Okay, which the reason why I showed you that specific video clip is because remember how we started talking about how if banks don't adapt to these technologies or adapt to these technologies, they'll fall behind. So if 20 banks in Switzerland are adapting to these technologies, you can only imagine what's happening on a global scale. Okay. I mean, it's just more confirmation that we as researchers and the individuals that are paying attention to detail, we are so right. We're so freaking right. Anybody that tells you that you're wrong is an idiot at this point. I mean, because it's right here in front of you. Most likely the people that are telling you that, banks aren't coming to crypto or whatever, they're people that got burned, that made wrong, improper, and immature decisions in crypto, and they're mad at this space. They bring too many emotions to this space instead of buckling down and doing research and listening to individuals like this, he's a CEO of a large institutional player in this space, right? Telling you guys that this is happening. Okay. And then he talks about how right now, via the macro environment, we're at an inflection point. I talk about this quite often, and we'll get into this in just a second. But the fundamental research that we do here at CYPRX, well, we started to see an increased appetite in risk asset adoption when major central banks started cutting interest rates, especially in the DeFi ecosystem. And as major central banks continue to cut rates, albeit, yeah, right now we're in a little bit of a sticky situation with the Federal Reserve continuing to cut rates via some recent data that we got. However, on a global scale, we got the ECB cutting rates, the Swiss National Bank cutting rates, we got the Bank of Canada cutting rates, we got the Bank of England cutting rates. And so globally, the search for yield is going to start to significantly increase as major central banks over the next consecutive couple of quarters/years cut rates, and DeFi TVL and the TVL in the total crypto ecosystem is only going to continue to increase significantly. I don't know how people don't see it. So with that out of the way, that directly coming from Signum CEO, this came out. Now, remember, I wasn't able to download this report, so I had to go in and find just a written report on Signum's report itself. But I just want to pay attention to some key highlights. So I want to read through this with you guys. This is from TradingView where they're talking about this report. This is from November 14th, 2024. So it's only a day old. Institutions bet big on crypto as 57% plan to increase allocations. Now, keep in mind, this is not some bullish overnight price prediction or bullish overnight hypium that I'm giving you guys. I even played a video clip of that individual rep from Franklin Templeton that said, over the next 12 months, this is going to significantly scale. So zoom out, have a long-term perspective. These institutions don't care about overnight gains. They care about long-term stability and survivability in this space and how their business revenue and their business model is going to benefit their clients over the long term, not tomorrow. Like most retail investors' mindsets are fixated on tomorrow overnight gains. Don't have that perspective, zoom out and understand that these institutions migrating into the space, it's still going to take some time. And we still have some headwinds in the market that we need to get through to survive through before we come out on top, okay? Institutional interest in crypto has reached new heights, clearly, right? A recent survey by Signum Bank revealed that 57% of institutional investors and finance professionals plan to increase their exposure to crypto assets, which I really like that they're talking about crypto assets in particular, because remember in that Citibank report that we just read, they specifically said that cryptocurrencies are being integrated into the financial system. This enthusiasm reflects a substantial shift in major players and how they view the long-term value of digital assets. Keep in mind, key vocabulary right here, long-term. Shifting sentiments and increased allocation, Signum's findings. The survey represents insights from banks, from hedge funds, from multifamily offices, from asset managers, and other investment-focused entities. It says it was conducted across 27 countries with over 400 respondents, with respondents averaging over a decade of experience. Now, I like that right there as well, because remember, Signum Bank, what did he just say? 20 banks are integrating crypto into their core banking infrastructure for their clients. And this is from 400 different respondents. So this just coexists with what I've been telling you guys, is that these banks, they know that if they don't adapt, they're going to fall behind. Okay. Notably, about 1/3 or 33% of these participants are Signum clients. Finding highlights a rising appetite for high risk investments in crypto and showing growing confidence in the digital asset space. Among the key takeaways is that nearly 65% of respondents maintain a bullish long-term view of crypto. Meanwhile, 63% plan to allocate more funds in the next 3 to 6 months. That puts us roughly in Q2 or towards the end of Q2 2025. Additionally, 56% are expected to adopt a bullish stance within a year. So this reverts back to what I said to you guys, after this next pump in altcoins, I personally plan on selling out my initial investment so that way I break even and my investments are risk-free, right? But don't lowball yourself, okay? Because what happens between now and 2026 is going to be peanuts compared to what happens between now and 2035, Okay. So fixate your attention on the now if you're here for short-term gains and a quick fix on making money, on how you can do so in the now through the utilization of DeFi, right? Deploying your digital assets into the DeFi ecosystem and earning passive income. Right now, I make over $2,000 a month by utilizing digital assets that I already have in my portfolio that are generating me yield. And I've shown you guys not only publicly on X and publicly on YouTube how I do that, but we created a whole entire course structure and breakdown through the Wealth 28 Club, showing you guys how in detail, picking apart the DeFi space, we do that, right? And so, you know, if short-term gains is what you're fixating your attention on, there's ways that you can bring into fruition those short-term gains, whether it's through learning how to trade, learning how to deploy in DeFi, so that way you don't have to sell yourself short after these altcoins pump in 2025, 2026, and then look back in 2035 beating yourself up because you sold too early, right? I'm just saying, okay, have a long-term perspective. Again, everybody's strategy is different, but just understand that these banks, they have a long-term perspective, okay? More than half of the survey respondents already hold over 10% of their portfolios in crypto, which is interesting. Meanwhile, 46% plan to increase their allocations within 6 months, and 36% are waiting for optimal entry points. Now, I like that. I'm going to highlight that in red, because what to an institution are optimal entry points? Okay, which is going to lead us over. I'll stop the rest reading the rest of this report. I mean, there's some other juicy information in it, but again, it just confirms institutional interest. I highlighted this in red here. 36% of these survey respondents are waiting for optimal entry points. So what things in the market, as we transition into this portion of the video, could we be paying attention to that could create those optimal entry points or those pullbacks and discounted prices? Okay. Well, we're going to revert back to another representative from, so that way you guys don't think I'm making this up. I've talked about this in previous reports. I've talked about the risks and the geopolitical forefront, right? Middle East tensions possibly escalating, weighing on risk sentiment, a pushback on rate cuts from major central banks as we head into 2025. And most specifically, what I've highlighted everybody's attention towards is the Bank of Japan. And if they decide to hike rates in 2025, the rapid unwinding of the yen carry trade that would unfold following those interest rate hikes from the Bank of Japan, and how that would negatively affect risk assets. That's one of the key things that I'm paying attention to. That, remember, I said in this breakdown a couple of minutes ago, there are still things that we need to put in our rearview mirror, put behind us, to solidify that those things aren't going to happen before we can be extremely overly optimistic. Like, all right, it's here. We're not going down anymore. Okay. Let's go all the way to the upside. This is okay. This just confirms that, because again, I always try to show you guys that these perspectives that I bring to the market are not based off of my opinion. They are based off of research. So here we have Signum's head of investment research, Caitlin T. I'm not going to butcher her last name, but just listen to what she says. She talks about the global geopolitical spectrum, the macro environment, and how it's changing, and it is positive, but there are still some things we need to be mindful of as we head into 2025. And one of the key things she touches on is how the digital asset ecosystem reacted at the end of July, which in particular, it was July 31st and the first week of August. And if we go and we look at the charts on TradingView, we saw crypto drop from 2.4 trillion all the way down to 1.7 trillion. And it was caused by two major factors: recessionary fears and the unwinding of the yen carry trade. Okay. And so let me just play this video clip, listen to what she says, and just take a second and just pay attention here.
First question we have in mind, right? With the backdrop that we have established, let's start today's discussion with the elephant in the room. The looming expectation for a Fed rate cut 2 weeks from now. The markets are already pressing in 25 to 50 bips cut. And it appears that the Fed is now shifted its focus to managing a soft landing as opposed to taking on inflation by the horns, right? Kathleen, on this end, how do you see the current environment position for risk assets? In particular, what are the implications for crypto?
Yeah, thank you for starting with maybe the most important big picture point, that the macro backdrop is actually favorable and benign. Now, having said that, we are seeing a lot of market volatility. We are seeing this in global markets. We are seeing it in crypto as well. And the way I see it, this is due to basically we have a system that is fundamentally fragile, And simultaneously, we see the Fed being actually really successful with kicking the can down the road, so to say. And this picture of a rate cut cycle starting, coupled with a likely soft landing, obviously it's not certain, but it looks like a recession would be, for now, definitely avoided. This should be an ideal backdrop for financial assets, for most asset classes. And actually, all year, in anticipation that this has been the trajectory of travel, equity indices have been making all-time high after all-time high. This is not surprising. Basically, the likeliest scenario is we're going into an ideal backdrop for risk assets. But this is coupled with this underlying nervousness that something could break actually any time. And basically, funding growth with escalating unpayable debt is not sustainable. At some point, this is going to hit the wall. But that point could be actually not very soon at all. So we see this picture that the market's leaning bullish, but very nervous. And every time, actually, most of the macro prints have been positive. On inflation, Q2 GDP growth revised up, and generally most of the data that comes out has been leaning positive or neutral to positive. But when there is a negative single macro print that comes out, the market reacts in quite an extreme way. There is almost an instant panic in terms of the market move, like at the beginning of August, also recently, a couple of days ago. And also we see risk metrics like the volatility index VIX spiking instantly. So we're kind of operating in this bullish but really nervous should there be signs that something is breaking. And
okay, so the reason why I wanted to play that perspective is because, yes, we are in a bullish environment, especially based off of the information that I've shown you guys up to this point. Institutions, they're coming. Banks, they're coming. They're integrating crypto into their core banking infrastructure. And anybody that watched this video breakdown now cannot deny that to be the case. That I just confirmed for you guys that is 110% the case, not only via reputable individuals in the banking industry confirming that on stage, where Matthias from Signum confirmed over 20 banks in Switzerland are integrating crypto into their core banking infrastructure. I showed you guys the document from Citi that they're doing the same exact thing. But what I really want you guys to pay attention to here is how she talks about the macro backdrop and how, yes, we are setting the stage for massive adoption of risk assets. However, the system is still very nervous, and there's still some things that we need to pay attention to. The two key points that I want you guys to take away is she said recessionary fears, and she talked about what happened at the beginning of August, end of July. And I just mentioned to you guys that was the yen carry trade unwinding with the Bank of Japan hiking rates and the bad NFP print that we got from the US, where that sparked recessionary fears. And if we go take a look at the total cryptocurrency market cap, we can see here that on July 31st, like I mentioned to you guys, here's the total cryptocurrency market cap. In that first week of August, we saw the crypto market drop from roughly about 2.4 trillion all the way down to 1.7 trillion. Now, the market quickly recovered. So this is why I bring this to everybody's attention, that if we see another major market downturn, because if, for example, the yen carry trade unwound further, and we write about this in our reports to our private community. For example, here is I just use a random report as an example. This is our November 8th report. This is just to show you guys how fine-tuned we are with what these institutions are talking about. We talk about the same stuff in our reports. So if you guys want to get tapped in and you're tired of all the retail jargon and the bull crap on the internet, and you actually want to know about what the banks are talking about, well, we write about that stuff in our reports. You can see here, one of the risks that I talk about that could possibly weigh on the digital asset space and give us some more discounted opportunities in the future is right here. Number 2, the yen carry trade and the potential Bank of Japan rate hikes, which is exactly what the Signum representative just talked about. Now, I won't break this down and go through it, but in detail, we talk about this in our private community, just paying attention to being mindful of what risks still could weigh on crypto. Because if that did unfold, like I mentioned, it will most likely be short-lived, just like it was back in, July rolling into August. But imagine how many people, if it did unfold and created massive liquidations in this space, how many people would get shaken out because they would be reading retail articles, right? saying and telling everybody that crypto is a scam, that it's going to go to zero. Oh my gosh, buyers are getting liquidated. What's going on? Everybody being fearful, right? The market's inducing fear. Instead of taking an educated approach and understanding why the markets are declining due to unrapid unwinding of the yen carry trade, which has been something that's been taking place for over 13 years now, where investors have been buying up or borrowing the Japanese yen to invest in riskier assets like stocks and crypto. Okay. That would be temporary. And so we, as educated retail investors, as individual participants in this space that pay attention to what the banks are doing, we can see that as an opportunity. I actually encourage, I hope that this happens so that way I can buy up more utility assets at historical low prices. Okay. So with that being said, after having gone through this video breakdown, shout out to you guys for jumping in on the call. Over 1,700 people on this call today. Really do appreciate you guys. We talked about banks integrating into the digital asset ecosystem. I showed you documents from the BCG. I showed you documents from Citi. I showed you representatives from Signum, all confirming this to be the case. Zodiac Custody confirmed it, right? That banks are going to start to move over slowly. Played you guys video clips from individual panelists on stage talking about the same exact thing. We know that this is happening. It's not a matter of if anymore. It's a matter of when we can all sit here and paint our little crystal ball picture on what's going to happen. But I really want you guys to have one key takeaway from this. Okay. And that key takeaway is how I opened this call before we got cut off at the very beginning. And it's that the internet is a powerful gateway to transform your life, whether it's through upgrading your mindset, expanding your network, growing your business. Dang, XRP just hit 91 cents while we're on the call with you guys. Go look at my Twitter post on one of the key psychological levels. I told you guys XRP was going to hit just a couple of days ago, 91 cents to the T. Anyways, expanding your mindset, expanding your network, growing your business, or creating wealth. Now is the time to participate in that form of empowerment. Okay. Now, again, don't be so short-sighted. Don't blindside yourself. Don't freaking think so this year, next year, even the year after. This crypto ecosystem and what we're living through right now is so much bigger than the next 1 to 3 years. If you want money now, if you need money now, if you need to generate income off of your digital assets, there are ways in which you can do that. I mentioned to you guys just a second ago, I make over $2,000 in passive income just off of DeFi investments alone. Okay. Learn how to do that. I'm not some magical freaking guru that is and has some information that you guys don't have access to. I created an entire community with other like-minded mentors in the space that have over a combined 20 years of experience to deliver for you guys how you can tap into the same information that is making us successful here at CYPRX. You have to get through that paywall. Yes, you have to pay a fee for our monthly program, but once you get past that small minuscule fee that we charge to get into our program, it does elevate you on a level that is relatively non-existent in this retail space. The info that we give, the strategies that we provide, the institutional delta zones that we give are one of a kind here at CYPRX. And so I encourage you guys to, again, take advantage of the now, take advantage of education in the now to better situate yourself for what is to come. And I honestly, to God, believe that what is to come, most of us can't even fathom, because most people, again, are so fixated on short term instead of the long term. Change your mindset. It all begins with the mindset shift. Right now, what we're living through is a once in a lifetime opportunity. Do not fumble the ball. So many blessings to you guys. Don't forget, we're going to have some, by the way, since there's now 1,800 people listening on this call, we're going to have some Black Friday sales coming up. I totally don't even pay attention to Hallmark holidays, but I know everybody else does. So I didn't even really realize that Thanksgiving and stuff was coming up. So in the next couple of days, I'll release some information on YouTube and on X on how you guys can score up on some Black Friday deals, just some minor discounts to get into our private communities. Just be looking out on X for those discounted coupon codes, right? I'll drop them on X maybe even later today. You guys can pay attention and tap in. For those of you individuals that do want to tap into our community, you guys head over to CYPRXtrading.com. We have so many options, whether that's through DeFi, learning our trading strategy, or just joining our Discord, so that way you get access to our fundamental reports, our private Zoom calls, our institutional deltas. There are so many things in which you can benefit from in the private CYPRX community. It was a blessings to you guys, having you on this call this morning. Shout out to everybody in the CYPRX community that's on this call. If you guys are listening, it was phenomenal. Anybody that's in the Wealth 28 Club that I got to meet most recently at the XRP Unhinged Unleashed event that took place this past week, it was really phenomenal to meet you guys in person and actually shake some of your hands. let's keep grinding, let's stay forward looking, and let's keep the momentum going. Even if we experience a market downturn, keep in mind, long term, this market is 110% bullish. So with that being said, hopefully you guys enjoyed today's video breakdown. If you're watching this recording on YouTube, smash that thumbs up button and subscribe. We do appreciate the love and the support, and yeah, it helps this platform grow. As always, many blessings to you guys. Be cognizant out there, be aware, make sure that you're furthering your education, and I'll see you guys in the next video breakdown. Everybody have and enjoy the rest of your weekend.